Good morning, traders. It's 8:02 a.m. Chicago time on Tuesday, the 16th of January, 2018, day after Martin Luther King Day. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance today is definitely bullish on equity indices, seeing strength across the board, across the globe on the indices. The leader this morning is the mini Dow, up 209 points, trading at 26,010 points, followed by the DAX up 0.78% at 103 points. NASDAQ, Eurostox, and E-mini S&P next, followed by the Russell. Seeing positive movement also in the yen, the Bund, the bonds, the euro, the British pound, and the 10-year. So it's all positive. Money's just being moved out of somewhere and being put into mostly risk assets being strongest, but also treasuries. The laggards this morning, crude oil is down 21 cents. It dropped a little bit right before 7:30 Central. And then, of course, Bitcoin and the crypto world is down approximately 10%, 10 or 11% this morning. Actually, the Bitcoin dollar pair is down about 16% or $2,000 per coin. Trading currently, depending on the exchange, trading currently at 11,477. I was analyzing, just doing some technical analysis on Bitcoin, and it's moving into pretty important area here. Anyway, so that's how things are shaping up. Hopefully you had a good break and are ready to trade again this gap and go market. Now, I want to remind everyone that, you can easily pull up the prior days trader bite, or the day before that, or the day before that, or the one from last month, or the one from November or October, pretty much anything after the U.S. election, and you pretty much have today's plan. We have a large gap, relatively large gap. If you may have noticed that the ES has been moving in about 10-point increments. We started Friday in the ES just above 2770, touched 2770, pushed quickly to 2780, held for a while, and then ended the day with a high of 2789, right up against 2790. And now we're at 2800, trading at 2801, with a high of 2803. We seem to be moving in 10-point increments here. In any case, that's what we've got. As far as what we expected, here's what was expected on Friday, which was pretty much what happened. The market did drop a little bit farther than where we were at the trader bite, maybe a point and a half. But it did exactly as expected. It bounced off of 2770. 2770 right here, and then we had an impulse up, and then we tangled up with 2774 momentarily, and then off to the races we go towards 2780. This is the expected plan, the primary plan. Nothing special here, no genius work going on here. Here's the secondary. The secondary is it takes off right away. We get impulsive and initiative right off the bat. Find our sellers above the overnight high and then rotate down to 2770 and then bounce in the middle and stick around between 2770 and 2777. That did not happen. The market definitely decided to push further without any problems. Here it is. There's your opening swing. The low gets put in right against the prior day's high at 27.70. Very systematic. Remember, we said the prior day's high is is finishing weak. The market interrupted the auction, and so the expectation is for continuation higher, and it did overnight. Now we tested that. We push down to 27.70 on the opening swing low, and then pushes to 27.74. 27.74. And then pulls back to the mid. That's unusual. Pull back to the mid within the opening swing. And then we start to push. Here's the impulse right here that I talked about. There was, again, there was the measured move at 27.74, 75, mostly 75. Where's my chart? There we go. 27.75. That's what tangled us up in here, but really it didn't have much of an effect. It acted as a base, and then the market takes off and continues to take off. Now, where we end up on the close is the same scenario we had back here and back the day before that. And the day before that, we ended up with an interrupted auction. The market did not finish finding its sellers. It continued to advertise price higher, and it finished near highs. Point of control is outside of the initial balance, which is these white yellow lines right here. And so this is closing on strength. The reopen on Sunday night was relatively strong. The trade yesterday, which was a holiday trade, and it's not shown on this chart because it is scrubbed out. Well, the holiday trade shows that we basically bounced off the top here and just simply traded higher and sideways yesterday. And then this morning, we continue to push higher. As you can see here, we're trading at 28.01. There's the last price right here, this yellow line. Overnight high, 28.0350. Overnight low, 27.92. This is a large enough gap. The probability of closing the gap, getting back to the gap close on this larger gap, is somewhere around 18%. Historically, again, past performance is not indicative. But it is generally considered to be a low probability fill back down here. Now, if the market finds its sellers finally against the 2800 or something, then maybe we'll see a return. But overall, this is a roaring bull market. We have earnings going on. Prior highs 27.89, all-time high 27.89. Here we are trading 12 points above it. So that's how things are shaping up so far. Look, coming in every morning and doing this trader bite, my expectation is we follow the rules of the auction. This auction is definitely run by long-term players, somewhat similar to what we saw during the dot-com bubble, similar to what we saw during the 2004-2005 real estate bubble. And this is what we have. I'm not saying that this is a bubble, but it's definitely not rotating upon itself. Here's the weekly profile. I talked about this last week, about how elongated and how quote-unquote defective the price action is, or the auction is, with the gaps there. You can't see it in white. Let me change colors here. Something nice and bright. We'll do blue. But you could see that the auction is just running away. It's not trading around itself. So here, the Tuesday of this week, is it Tuesday or Wednesday? I think it's Wednesday. The Wednesday of this week didn't bother to check the prior balance. We checked it on Tuesday, right after the new year, and then we keep running away. And what this does is, it tells us that the participant, the key participant here, is not interested in day time frame levels or intermediate time frame levels. They're continuing to buy whenever there's opportunity. Any dip is bought, and this is generally the behavior of the OTF or the highest time frame, and we are just beholden to that. The higher time frame is what sets the trend, the long-term trend, and sets the overall tone of the market. The intermediate time frame takes advantage of swings that span across days, and in the day trader time frame or short-term trader time frame, which is me, I'm taking advantage of rotations intraday and staying out of whatever happens in the overnight session. So this is a market for long-term traders, really, with some opportunities during the day for short-term traders as well. So that's what we have in last week's profile. It's just, there it is, just trend day after trend day. The probability of multiple trend days in a row has historically been fairly low. The probability of trend day historically over a 2,500 day look back has been around 18%. That's not so. It hasn't been so for about a year. The probability of trend day is up to 28%, the highest I've seen it. So it's not, what's the point of all this? The point of all this is, don't get stubborn with your shorts. I see people defending shorts. I see people listening to market profile gurus or whatever, telling them that I was going, on indication from a friend. I went through and looked at someone's Twitter stream, market profile guy, and he just keeps saying that the market's run by weak hands, to look out for the turn. The turn is likely to be big, massive liquidation. But it's kind of disappointing, because for someone who has spent a career building a view on market profile, this is not, I don't see the action here. When you look at how this is structured, you look at the TPOs, the periods, it's not at all structured so that it's run by weak hands. I do not see any indication yet that liquidation is imminent, and that's what I've been warning about for some time now. I'd like to see the structure below us get tested, give us some strong rotations down. But seriously, it's one time framing up on the weekly. It's one time framing up on most days on the daily. The brackets on 30-minute brackets are generally one time framing up on the bigger moves. There is no trend, bracket trend or one time framing down that is sustained. So why in the heck would you expect this to be done? So I say stop trading what you want to see, trade what the market is saying. What the market is saying is, we are forming balance. We are using that as fuel. We're finishing near highs. We're forming balance. We're using that as fuel. We're finishing near highs. Don't step into it. Don't step in the poop. Okay? Just don't try to make the wave. Just surf the wave that's already there for you. The bigger the energy, the better the ride is, and that's just how it rolls. Not trying to bash anyone. Just warning about all the doom and gloom type conversation that I'm not a fan of. So let's look at the overnight. Here's the overnight. Okay. Again, nothing unusual here for what we've seen. Market opens up. Remember, I cleaned off Friday's trading and Monday's pre-open, Globex open trading, and we have 27.94 and a quarter, and we have a pullback. The market gets responsive on the open, which is always healthy for the buyers. Gets responsive on the open, down 27.92, right up against this measured move here, and then off to the races we go. We did this in the Asian session, which has been fairly quiet. The European session came in and pushed even more, and we have not backed off. We have not tested this mid. The mid is this blue line right here. We have not tested this mid at all. It's just the market's staying above there. This is fairly strong. Again, we have a large gap. So what are we expecting for this morning? I'm going into these explanations not because you're those who are listening are just idiots and don't know what they're doing. That's not the intent. I'm going through the explanations so that you're not taking my word or anyone else's word for it. You're doing your own analysis. You might disagree. I hope you disagree on some of what I'm saying, because I have a fair chance of a pretty good chance of being wrong on a daily basis. I've shown you trades that I've taken that were just wrong, and plans that are wrong, and that's part of the process. This morning, expecting open auction, expecting a quick burst up. I'm looking for 2,800 to act as a base, 27.98 actually. So small response, expecting a push up, and then consolidation. I'm not looking for the market to move that far this morning. 12 to 14. I'm looking for a move of about 12 to 14 points. There's the primary scenario. I just can't see us. With the structure that we have overnight. Again, let's show that. Where's the overnight? Where are you, overnight chart? There we go. 180,000 contracts in the overnight session. So I'm looking for that structure to continue. Again, just like every day in this kind of structure, open auction, push up, looking for the overnight high to be taken, and then expecting some sort of failure, an impulse down, for it to come back to gap mid and hold in the middle. Again, expecting a profile that is 9 months pregnant, I guess. And that's the secondary scenario. Now, if we do get some liquidation, that would be the best of all. The liquidation would likely look like an open auction that pushes, finds seller, and then continues down, is unable to get back above the opening swing high, continues down to test out the prior days, the high of the year so far, and to come down to 27.89. That gives us approximately 16 points. But if it does get this far, then the expectation is consolidate and then continue to drop into the prior day's range. That's scenario number 3. Now, okay, I've gone through this again and again, but how do you translate that into a trade? Essentially, I'm just looking for, how does this respond on the open, right? How does this respond against size on the open? Against size on the open, is it colliding and falling off like you see here? This is a collision right here. So we have size, and the market comes to size, and it trades a lot, and then it fails to push and sustainably stays through, and then starts to fall off. This then becomes short-term resistance, very short-term resistance. We're looking for the last zipper area or consolidation area as support. Okay, so we have we have the spike here overnight. Looks like last support before the run is right here. There's the retest. This area here is expected to provide some resistance initially. However, this is the pre-open. Now we push through on the open. We push through on the open with a higher size because of the day session. It starts to look a little bit different. Okay, so what I'm using here as an example is, of course, using the overnight volume. But this is, this is not exactly how it works. We're waiting for day volume. We're looking for the ARB systems to kick in. We're looking for real size to kick in. And then we're seeing how the market responds against that size to lean short or long, depending on the plan we expect to be playing out. And it's just once the market shows us, and this could result in a loss or two. Once the market shows us which side is in control, then it's easy. We just look at our plan, the scenarios, and then we manage a trade accordingly. It's really about trade management, right? So you're looking for to execute against your plan, define your risk, keep your risk as constant as possible, and relative to your account size, and then just let the market do what it's got to do. Even if a trade gets filled, let's say you get short here and you get filled and it looks good and it starts to move lower and it gets up against this last support here, pops up and starts to move higher. Don't despair. Yes, this was a trade that went in your direction by a point and a half, and now it's a losing trade. That's just how far it went in your favor does not matter. It's what matters is letting it play out, letting the market tell you how far the wave should take you, how far that surf should take you. It's not something you can dictate. It's not something you can punish or fight with the market with. You can just relax and let it do what it's got to do, and then wait for the next wave. Yes, it costs you money, but that's just trading in a nutshell. That's all I have for you. Good luck today, and I'll catch you tomorrow. Take care.